Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Zak's Traders Cafe. Today I'm joined by Mark Boggett, who's CEO at Seraphim Space Investment Trust. How are you today, Mark?
Yeah, I'm great. Thank you for inviting me on the show.
For some reason, it's a bit of a mouthful for me, but I'm sure we'll get going. Just if you could tell, for people who are not aware, I think you've been listening for a few years, but just what exactly you do and what your goal is.
Yeah, so I run an investment firm called Seraphim that's thematically focused on space technology. And during the course of the last 10 years, we've become the most active investor in the space market globally. We've got 147 space tech companies, and we run the world's largest space accelerator program, Space Venture Fund, and we have the only listed space investment fund on the London stock market, which is the one we're talking about today, Seraphim Space Investment Trust.
Right. I mean, there was a lot of excitement as far as your company being listed a few years back, but so there was a dip maybe in 2023 in the share price, etc. And there were probably factors to discuss about that. But do you think that maybe with the benefit of hindsight, Seraphim was listed a bit early?
Well, anybody who was listed in 2021 has had a challenging birth on the public markets. So we're not alone in being having had a challenged few years. The investment trust market itself is very challenged, and some say even broken. But I still believe that it was the right thing for our organisation to do. So even with the benefit of hindsight, I'm still pleased that we're listed. Well, first of all, it provides us with evergreen capital, which aligns nicely with the long-term nature of the assets that we invest into. And then the other thing that has been very positive relates to our profile in the US market. So as a UK listed fund, we've enjoyed a really high profile in the important American market. America is a really important place for us originating deals. And our status as a listed space fund has served us very, very well in that market, which means we still get to see early on proprietary deal flow, the best entrepreneurs approach us. And this has enabled us to be able to continue to invest in some of the best companies coming out of the US, some of the best teams that are spinning out of SpaceX. So there's been a range of benefits that perhaps are not evidence to investors, but will actually really benefit over the longer term for the fund.
I suppose we know that the Americans are rather more gung-ho about space than we are, and obviously Elon and Jeff Bezos, etc., are doing their activities. Do you think that being listed here has been a drag on sentiment, or the investors here are not quite as enthusiastic as they're on the other side of the pond?
Yeah, I mean that really is a factor that has been somewhat of a challenge. But I believe that the future is looking brighter for all the wrong reasons, though, I'm afraid. Defence is a very clear 10-year growth market now. We've got $1 trillion allocated by European governments to address their defence capability deficit. We've got $1 trillion defence budget over in the US, Donald Trump, with a quarter of that going towards the Golden Dome. So a lot of this defence spending is very heavily space-centric. And this is really becoming apparent to investors now, the dual-use nature of space, its importance within the defence environment, from being able to provide intelligence from satellites, being able to provide satellite communications, being able to provide GPS. These are really central things for defence requirements, and space plays an important role there. So we actually think that that investors are now recognising that we've got a really strong line aligned with this long-term growth theme. So and that's now being reflected in our share price, and we're bringing new news flow out every single week that's really demonstrating how our portfolio companies are winning large contracts, defence contracts, aligned with this change in the defence market.
So it's less Star Trek and more Star Wars that you're going on at the moment.
Well, it is. I mean, one of the things that's always worth sort of pointing out early on in a conversation like this is what we don't invest into, because it defines what we do. We don't invest into launch because Elon's done that so well, 20 years ahead of everyone else with almost unlimited access to capital. We don't invest in space travel. We don't invest in the moon or the Mars or anything to do with that kind of activity because it's going to be so many years before right now, it's only a government market. Who knows when there's going to be a commercial market? So what we're investing in relation to the space market is space application for Earth, where there's a terrestrial market opportunity that space capability, space data, space communications is able to address uniquely. And that's really where we're focused. So our portfolio companies can quickly access revenues, grow those quickly and turn them into profits. So more than half of the portfolio is now either profitable or has raised sufficient capital to reach profitability. And that's something that that we're really trying to educate the market to help them understand that this isn't about Star Trek. It's really about capability. That the easiest way to think about it is sort of next generation GPS. We all use GPS every day in our lives. It's used by every industry you can think of. And we're really investing into capabilities that sort of take that to the next generation. GPS is 30 years old. We're investing into the sort of the later next gen capabilities from space.
So I suppose the final point would be that you've been on the market 3 years. It sounds as though the heavy lifting, the dirty work, and maybe just the being a bit ahead of the curve and the market being horrible has all been done. Is this the sweet spot? Is this the right time, you think, for people to look at your company?
Yeah, I think that the worst is behind us. I think that the growth themes that we've been talking about consistently, quarter after quarter for years, is now becoming very evident. And that's now coming through in the news flow. It's not yet being reflected in the numbers because our NAV is a trailing indicator of value. So contracts that are being sort of announced as won right now, take up to 12 months to actually come through in the numbers. But that is really being recognised by the market, and there's just going to be more and more news flow coming through that. And then we had a big IPO last week. One of our portfolio companies, Voyager Technology, IPO'd on the New York Stock Exchange. That was valued above our holding value. And then, it's had a very good success in initial trading. So, that company came to the market at $31. It's now trading around sort of 55. So there's been a good sort of valuation increase there, which hopefully people will start to read through at the other portfolio companies within our top 10 and realize that there's some real value in some of the companies that are in our top 10. 70% of them are focused on defense, and we're just frequently announcing the new contracts that these companies are winning.
Just reading around your company ahead of this interview, I think somebody wrote or somebody commented that your portfolio could be worth billions. Obviously, I'm sure you wouldn't disagree with that. But at the moment, your market cap's around 170 million. Would you regard that as just the foothills, quite a modest level at the moment?
Yeah, it really is the foothills of what the opportunity is here. You're absolutely right. There are many companies within the portfolio that have the potential to be valued in not just billions, tens of billions. Our first portfolio company that we've got that's reached over a $10 billion valuation, AST Space Mobile, cell towers in space. They're now trading at a $12 billion valuation. And we believe that there are many companies within our portfolio that can command that kind of enterprise value. And it's really just a matter of time before that becomes evident. The market really starts to believe that, and that will then get reflected in our market capitalization. So yeah, we're confident of where this market is taking us, and we're confident that over time investors are going to realize that, and it's going to be reflected.
Well, we look forward to that. In the meantime, Mark Boggett, CEO at Seraphim, thank you very much indeed.
Thanks, Zach.